What's up, everybody? It's your boy Orlando, aka King Smitty, and we're here to discuss the topic on is it time to buy these dips yet? But before we get started, go ahead and hit that like button and subscribe. If you're not watching on YouTube, follow my YouTube channel. It's King Smitty 55. I just want to take time to thank y'all for doing that, but let's get to it. So, as you can see, my portfolio is down roughly 13% year to date. The market has been doing right now it's in the process of a correction, right? We're not really at a crash parameter yet. We're not in the parameter for a stock market crash. Right now we're in a correction still. And my portfolio is heavy on growth stocks and things that I see doing well in the next 3 to 5 years. So this bear market that's trying to form right now, I'm not worried about it. I'm not worried one bit about it. For me, I see this as a major buying opportunity. But what I'm trying to do is I'm not trying to buy it right now and then it continues to drop. It's called like catching a falling knife. You catch it, you cut yourself. Now things are worse than just dropping a knife. Now you're bleeding all over the place. So what I'm trying to do is I'm trying to let that knife hit the ground. And once it hits the ground and kind of consolidate and go flat a little bit, then that's when I try to start loading up. Because that's when the market is going to turn around. And instead of trying to predict when the market is going to turn around, react. Because that way you're more in control of everything and what you're doing. But yeah, since this bear market is trying to form, it does give me a chance to bring down my average price in some of these plays. Because like I said, a lot of my plays, the leadership didn't change, the goal didn't change. Only thing that changed is the overall market. What's going on? You got the different variants going on. You got the issues between China and America going on. You got interest rates going on. So there's a lot of things that's affecting the market right now. And my companies are still doing what they were doing before all this happened. So I'm not going to abandon those companies. If anything, this is a discount. And as well, a lot of these plays that I wanted to get into that were overbought and just shooting up, a lot of those are coming back down. And as they come down, they allow me to establish a position or begin to establish one. So I'm either jumping in or I'm just slowly, I buy some here, or it's still dropping, okay, I'll buy some more. So it's giving me a chance to fill my positions and get where I want to get at in the market. So as you can see, we're going to look at the chart. So the S&P 500 is only down 8.3%. And you can see it right here in comparison to my portfolio, how far I went. Of course, the S&P 500, it does measure companies it measures 500 companies with the largest market cap. Their EFT is called SPY, SPY. There's some companies that's in their holdings in the S&P 500. It'll be Etsy.com, Twitter, Disney, Netflix, Tesla, stuff like that of that sort. That's only a few just named that they're holding. The S&P 500 kind of represents like the faster growing companies. So companies that are booming but are still on the rise up. So that's why I like to measure my portfolio to the S&P 500 because they're a lot more bullish than most indexes, shall I say. And I consider myself to be pretty bullish as well. Not full of bullish, but I'm bullish on these stocks, right? Dow Jones. Let's look at it again. Boom. Compared to my portfolio, it is down 6.3%. The Dow Jones tracks 30 large publicly owned companies on the New York Stock Exchange and the NASDAQ. Their EFT is the Dow Jones Industrial Average. I think it's like DIA. But we're going to take a look at that later on. And they hold something like Home Depot, McDonald's, Goldman Sachs, Microsoft, Visa, Caterpillar. And you remember, if you look back a few videos ago, Caterpillar was one of my infrastructure plays that I see going up in the future, right? And I just spoke about Microsoft recently with their deal buying Activision, Blizzard Activision, right? So the last one I'll talk about, just compare my portfolio to year to date, is the NASDAQ. And the NASDAQ tracks over 3,000 companies. The NASDAQ, I believe, tracks every company that trades on the NASDAQ. So you got companies like Amazon, Comcast, eBay, PayPal, Tesla, and a lot of these stocks are on every one of these indexes. So you got some stocks that are in S&P 500 that are also on the Dow Jones that are also on the NASDAQ. The difference is how they're weighted in that how they're weighted in that index. So now let's take a look at some technical analysis, and we're going to start off with the SPY, right? So right here we're looking at the S&P 500 ETF trust. We're looking at the daily chart, and we're using candlesticks. And as you can see, I have my simple moving averages. The yellow line is the 50-day close. The burnt orange one, or burgundy, is the 100-day close, and the purple is the 200-day close, right? You can see these tickers went below every single one of the simple moving averages. Bearish case number one. So let's look at that. You can see it's currently in a downtrend from January 5th to now. It's been only red tickers. So the sellers have been in charge, causing the price to drop. You can see you're down here at the RSI. It is at 24.77. That is considered oversold, right? But it's not time to buy yet. And this is why I think it's not time to buy yet. If you look at the MACD crossover, when this blue line cross that red line, and then you can even look up same time with this last green candle, January 5th. Once it crossed over, you see this blue line dropping. And as it dropped, the stocks drop. So for me, a clear sign of a turnaround, and it's not even, like I said, it's not even a clear sign, but a good sign, is once this blue line right here crosses over this red line, then it might be at that point time to start buying these dips. Because at that point, hopefully, the market is consolidated, or at least on its way to making a turnaround. It's already in the oversold category. So hopefully at that point it does do a little turnaround. Stock market, I can see easily if the S&P 500 continues to drop, because it doesn't look like there's another support line. Let me draw a support line. We'll do a horizontal line right here. That's the next support line I see for the S&P 500. Let me make sure. Yes, because if I draw another one, you can see over here, it was touching these. Right here in July, it was a resistance line. It couldn't get past this. Boom, it bumped past this. Now it couldn't fall below it too much. It was a support line. It came up, it hit a little bit, it bounced back up. Right? So now you can see over here, of recent times, you can see that it's using it as a support line. So if it drops below this, I could easily see this play drop another, I could say 10 points easily, the S&P 500. So what I'm looking for, really, and I'm not a financial advisor at all. This is just my due diligence. So make sure before you buy, sell, trade, or hold anything, do your own due diligence, and make sure you like and subscribe. But before I do anything, I really want to see this blue line cross that red line, and I want to see this RSI loop back around to 30. Ooh, excuse me. Okay, so let's look at we're talking about second, the Dow Jones. So I'm going to type in the Dow Jones. Here it goes. The Dow Jones Industrial Average ETF. Right? You can see the simple moving averages are a lot closer together than what it was on the S&P 500. I'm going to draw a horizontal line. So that's the next support line I see. And then boom, could be another one right down there at 334. But the next support line I see is at 339. The price of the Dow Jones Industrial Average is at 342, so it's like 3 points away. It breaks that, it could free fall for a little minute. Honestly, I'm not gonna lie to you. Let's shorten it up a little bit. Yeah, if it breaks below that, the next one will be 332, I believe. Like I said, I'm not a financial advisor though. I'm just doing my own due diligence, my own research. Just make sure you do as well, like I just said. But you can see, same thing with the S&P 500. The RSI is dropped below the oversold. So at this point, the S&P 500 is oversold. The Dow Jones is oversold. Neither one of them measure the entire market, but it's a good benchmark for them, right? You can see when this blue crossed that red line, if you look up to the stock as well, it happened, a day after the all-time highs for the Dow. And once that happened, it starts to drop. And it starts to drop. Drop below the 50-day, the 100-day, and the 200-day. Simple moving average. So, still it's in a bearish market. A lot of these prices are dropping right now. Long term, it's still in a, both stocks are still in a uptrend, long term. But short term, we're in a little bear market right now. Let's look at this very last index called the NASDAQ. And the NASDAQ, like I said, it measures every stock that's traded under the NASDAQ. So that gives you another representation, but this is more like the full market for them in a sense. And what's different here than the other stocks is you see this yellow line right here, this 50-day simple moving average is starting to cross and intersect with the 100-day moving average. And when that happens, that's a technical sign. It's called the death cross. Look it up. That's when the shorter moving average crosses below a slower moving average. And if it was the opposite way, it'd be called a golden cross. We'll get into that whenever we see it happen. But if this crosses, the 50-day crosses the 100-day, let's see if I can zoom in a little bit. That is a very bad sign for us longs. Longs mean that we're holding and expecting the price to go up. That means this price could drop, and we can go into a full-on bull market. Just like the other two indexes, it's oversold. The blue crossed the red the same exact day. It was the last green candle, almost at all-time highs. So let's just say tomorrow or this week we get like straight greens, like green, 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 and they're big enough. If this crosses right here, or probably be right here, shall I say, or maybe on Tuesday it'll cross, At that point, in my mind, it's like, okay, let me start buying some of these dips now. I don't want to buy it prematurely, like I said, and then it continues to drop, continue to slide, and now you're looking at my portfolio and it's like, oh, it's going down even lower. No, the thing is to buy low and to sell high. So I'm trying to buy it as low as I can and to sell it as high as I can. And this MACD crossover can very well be a good indicator of when to buy and to sell for some people. Like I just showed you, when it crossed right here in November 9th, it was at all-time highs. The blue crossed the red, and you can see ever since then, it just got lower and lower. It was kind of consolidated a little bit, but it was like at an angle, so it was going down. Then the blue crossed again. You see it tried to do a little something. It bounced up. It went back up. But when the blue crossed the red again, it dove down. So that's just a little technical analysis for you. Kind of how to use the RSI for the oversold and the overbought, and if the stock is neutral a little bit, and then the MACD crossover as well. To give you another example of what the market is doing per se, this NASDAQ right here, once we do start turning around, the 50, the 100, and 200 day moving average will all be seen as a resistance temporarily until we can break those. Just like you can see going down, it broke the 50 day moving average. It did really good on the 3rd. And then we gapped down. Because we closed up here, but then we opened up already below the 50 and the 100 day. And you can see we moved. It hits the 200. No, we're not going down. Then it hits the 200. No, we're not going down. And then it hits and closes on the 200. And then they drop down below it. So you can see at that point, it was using the 200 day as a support line. And what is support, once you go underneath it, then comes be resistance. It turns into resistance line. That's a little bit more for you. But if you've been rocking with me so far, like and subscribe. Leave me a comment on what index do you use to measure your portfolio's growth. Like, do you compare it to the S&P 500, Dow Jones, the NASDAQ? And are you buying the dips yet? Comment that for me. Are you buying the dips? And if you are buying the dips, what stocks are you looking to buy the dips on the most? So just let me know that. And it's been nice talking with y'all. Appreciate y'all for rocking with me.